Uh, I'm having a few technical issues here. I can't hear you at all, Brad. Can you hear me?
Yeah, I can hear you just fine. I just realized that my mic was muted, which is weird. Normally when I have that intro play in, it normally unmutes my mic automatically at the end of it. So let me start over here real quick, folks. I said good morning, and I wanted to let you guys know that, you know, so often I tell you that I don't have a crystal ball. And today I'm doing one better. Mr. Crypto Bullseye here does have a crystal ball, and maybe it's not exactly a crystal ball, but this gentleman knows the charts. He's had incredible mentors. He's put in hundreds and hundreds, possibly thousands of hours learning his craft. And I'm so excited to have you on the show today and really looking forward to getting your perspective on where you feel like the markets might be heading. So welcome to the show again, Keith.
It's been an absolute pleasure coming on the show last week, and thank you again for having me this week, Brad. Yeah, as far as the market's concerned, literally, I've just sat down. This is the first time that I'm looking at the market, so we are actually literally going to be going through my process live. So thank you guys again for having me on, and I'm looking forward to this one, Brad.
Awesome, man. If there's anything that you want to bring up to the screen, go ahead and hit present and share it. I'll add it to it. And you know, I was just kind of curious, my own little question or my thought process. The title of this video, you know, what's next? Bitcoin to 125, or will it dump down to 90? And I was just kind of curious if you could maybe pull up Bitcoin and take a look at Bitcoin and, you know, give us your opinion on that. Do we have to worry much about Bitcoin dumping all the way back down to 90, or do you think we're headed for, you know, 125 and higher over the, you know, the next handful of weeks, next month or two? Kind of curious to get your opinion on the big boy Bitcoin to start off the show.
No problem. So I'm just sharing my screen now. Can you see that? Showing the right one. There we go, Brad. So what do I think about Bitcoin? Bitcoin's holding up. So what we do is we look, how far away is it from all-time highs? That's the thing that people are talking about. And one good thing about looking at this Bitcoin chart now, which is the first time I've looked at it today, is that the candle closes are a lot higher than the previous candle closes, indicating that there is momentum there. So we can see that if we zoom out on the weekly, we've had a weekly close, which is the highest weekly close. We previously had a weekly close, which was the highest weekly close. So we're putting in higher closes, which is showing significance as far as momentum's concerned. One thing that we do, Brad, one thing that we do to take out the noise is, one thing that you've got within a candlestick, you've got a lot of ups and you've got a lot of downs. You've got a battle between the bulls and the bears fighting between each candlestick, and you'll see wicks to the top and you'll see wicks to the bottom. However, there's a resting point, and what you could do is you could zoom out onto the weekly chart, and you can see we've got a bar chart on here. You can zoom out, and then what you can do is you can just, wrong thing, just completely messing this up here. What you can do is you can actually zoom in and find out exactly where the sticking points are for the day, where the sticking points are for the week. And what that does is it takes out the wicks to the upside and the wicks to the downside. And you can see here, if I just get rid of this, remove the 14 drawings, you can see that the candle closes at the end of the day are getting higher, and they're getting higher. So we're holding up at the moment, whether we're going to get a pullback. The question that you mentioned, as far as the Heikenashi, question that you mentioned as far as, let me just get these, sorry, I'm not too prepared today, Brad. There we go.
Hey, you're good, man. We got all day.
Right, okay. You can see that, yes, we have. So you can see that we've got higher candle closes. We're hovering above. Are we going to go down to 90,000? What would happen if we needed to go down to 90,000? We would, of course, need to break this 382. So we've got confluence. We talked about this previously. You've got 38.2% retracement, which is significant if we get a bounce from a 38.2, which signals a strong trend. 618 is a strong trend. 382 is an even stronger trend. But we've also got the 618 confluence, which is the 618 from this previous swing. So we've done it in reverse here. We talked about this in the last video as well. You've got the 786, the 618 here. So you've got confluence there, you've got confluence there, and then we talked about this previous build of price action, which was previous resistance, which you would expect to act as support. So 90,000 to me, something bad would need to happen. And I know that seems to think that, well, things are going on as far as tariffs are concerned, uncertainty and that kind of thing. But to me, it seems like it's leveling out, and it seems like crypto's holding up. Altcoins are being battered as much as they can be battered. And you can tell that by the dominance. We were talking about this in the chat in our Discord group. You can tell that the dominance is weakening. And we talked about this bearish divergence last week, which is signaling on the daily, on the 3-day, that we're losing momentum. So the higher time frame showing that the Bitcoin dominance is actually losing momentum. Bitcoin dominance can't continue. We talked about it last week, Brad, and I just reiterate that XRP, Ethereum, Solana, all of these big boys, Binance, Cardano, they would really need to start failing for this to happen. And we're talking about ETFs with all of these boys now, all the blue chips. We're talking about adoption. We've got regulation going in with the 3 big bills that's going on, going into the next week. So there's lots going on as far as news is concerned, as far as sentiment's concerned, and there isn't much fear in the market. The fear's gone out of the market, and it feels like that we've been hit hard. Altcoins are being battered. That's what the retail's holding, altcoins. So we've all been battered. We've all been bruised. And then you get the stagnation, the sideways, the boringness. And let's have a look how long this boringness lasts for. So Bitcoin put all-time highs here. This was January 2025. We had the altcoin rally towards December 2024. People were calling that alt season. That wasn't alt season. Bitcoin dominance didn't drop enough. Altcoins didn't rally enough. It wasn't an on-risk rally in December. It was more of a relief rally from the previous bear market because we got absolutely slammed when Bitcoin was just moving up and moving up because the ETFs were getting bought up, and then there was world adoption. Things were happening as far as Bitcoin's concerned, and that's why it started running earlier. So we had the relief rally in December 2024 on altcoins, but things are looking pretty rosy as far as I'm concerned, because this thing does need to come down. And Ethereum, Cardano, all of these big blue chips, they're not going to fail when you're talking about ETFs. You can talk about adoption, because at the end of the day, you're going to get some kind of a .com bubble. We're not at that point yet. We're not at the point where you're going to get your Google, you're going to get your Amazon, you're going to get these big boys that completely dominate the market. We're not at that point yet where one's going to get picked. We're still, to a certain extent, in the early stages. You've got Ethereum. Ethereum's going to get adopted, and however, we know that Ethereum's got problems with it that need fixing. Those problems are solved by Solana. However, Solana's less decentralized. So each one have got their own benefits, and kind of there is going to be a winner, and I think that winner is going to be the one that collectively solves the issue. I mean, Ethereum's going to be the one that's going to be adopted as far as finance is concerned. Let's take a look at the Ethereum chart while we're talking about Ethereum, because Ethereum does need to start outperforming Bitcoin. And let me just stick that back on the daily, Brad. Were you going to say something then, Brad?
Yeah, I had a quick question. So, you know, it's been probably a little over a year ago now, and yeah, definitely a year ago, because it was a couple of weeks before. It was before the halving, and when Bitcoin kind of surprised us all by going and getting up above its previous all-time high before the halving. So it's probably, you know, March of 2024. I had some pretty good traders on the channel, and they all predicted, probably on the low end, $175,000 Bitcoin during the peak of this bull market, maybe even as high as 200 to 250. But if I'm understanding you correctly, if you believe that we're on the verge of an altcoin season, I'm assuming that you don't agree with that anymore. Are you under the assumption, or are you believing that Bitcoin's probably not going to run up to 150 or 175 before the end of this bull run?
It could, Brad, but I think that when Bitcoin runs up to 175, that's like 75% increase, or 60, 65, 70% increase from where it is now, where you see altcoins doing 3, 4, 5, some of the big smaller chips, 10, 20, 30 kind of thing. So that's where the dominance comes down and everything starts outperforming Bitcoin. It doesn't necessarily mean that Bitcoin's going to go down. But one thing that we can do, Brad, is let's do this as far as projections are concerned. we can measure using a Fibonacci extension. So we've had a swing here. We've pulled back on this swing here. We bottomed out on this swing in August 2024. So this was the last rally. And what we'll do is we'll measure from that low all the way to this high. And then we'll use a pivot to this low here as the previous bottom before we got the V-shaped recovery. Then what that's going to allow us to do is have extensions. Now, firstly, you've got your 1-to-1 extension. So if this is an equal measured move, 1, 2, 1, both of these swings are exactly the same. That would come to 135,000, pretty much just over 135,000. Your next Fibonacci is the extension. So you often get an extension on this wave. That 1272 is 151,612. And then you've got the golden 1618 up here, which is very similar to the numbers that you were mentioning just a minute ago, which is 172,581. So the year's analysis to back that up, if it did get to the 1618, the year's analysis to back up to the 175,000. And it does look like we're going to continue to put new all-time highs, because if we look at the S&P, and you look at the actual expectancy of the S&P to continue rallying, it's got a high expectancy of putting in many all-time highs continuing over the course of this year. Now, what is many all-time highs? It's got a 91% probability that I read somewhere that it's going to continue to put, and I'm not sure if I'm absolutely butchering these numbers, but it was between 8 and 11 times this year. So if you think 8 and 11 times this year, it sounds like you potentially could go to the end of the year of the S&P just completely rallying. However, if you just get candle that does this, and then a candle that does this the next day, that's 2 times, that's 3 times. So you don't know how far and how long the rally is going to last. So yeah, we potentially could put 8 to 10, 8 to 11 more times in on the S&P, but all it needs to do is just go up a bit each day and up a bit each day. And that could take 8 days if it kept going up each day. So we do need to watch it, and we do need to understand it. And we did look at the time frame, didn't we, before, Brad, last week, as far as the Bitcoin's concerned, and my magic ball that I haven't got. So if I just zoom back out onto the weekly, we talked about how the previous cycles worked out with 152 weeks between the low and the high, and then 52 weeks during the bear, then 152 weeks. So we measured and we predicted the cycle. We've come a week since then. So this 15 bars is now 14 bars. We know that this is not going to be something that's going to be intact. It's been intact. 1, 2, 3, 4, 2 cycles, bull markets, 2 cycles, bear markets. Doesn't necessarily mean it's going to exactly happen again the same, but it does give us that wiggle room. So it does give Bitcoin enough time to push further up to the upside. And as that happens, and as we start seeing dominance dropping, if you just zoom into the daily, you can see this is what I'm excited about, because we're testing this bottom here, and we've had 1, 2, 3, 4, 5, 6, 7 touches now. So we're actually, if you think of it, guys, and if you think of it, Brad, as we're walking on ice, you're treading on ice, and you're trying to crack through, and you're trying to crack through, and you're trying to crack through. Each time that you hit it, and each time that you hit it, you're making it weaker, and you're making that level weaker and weaker, until ultimately you break through. And once you break through there, that means that the bears have lost control. The bears are actually stopping their sell orders. The bears are actually moving out of the market, and they're looking to wait for another opportunity at a better level. So if the bears, sorry, the bulls. So if the bulls lost this, sorry, and the bears gain momentum here, the bulls would be waiting to come back down to this next support, which coincided with this trend line here, which coincided with this. This is where the bulls would start buying. So they'd lay off here, they'd lay off here, they'd lay off here. The bears have got control once they've lost this key support level. So that's weakened. And then they'd be looking for the next support base. So this is why this is important, and this is the Bitcoin dominance. So we want the bears to win in this case, because we want altcoins to start outperforming Bitcoin. So you can see that we're weakening and we're weakening, and we're waiting for this. When you actually look at that, that doesn't look much when you zoom out. That ascending wedge pattern, once that breaks, that is going to break hard. So you've got, just an example, from where price is now down to this level here, 57%. So it's from 65% to 57%. That's going to be a huge surge in altcoins, because Bitcoin's got such a big dominance. When you take out, what is it, 7%, 8%, when you take out 8% of Bitcoin's dominance and put that into the altcoin market, that's a hell of a lot, and that's going to create narratives. And I think we're going to have more narratives driven this time as well, Brad, because we've got more altcoins to choose from, so there's less liquidity. Although overall there's more liquidity because more people are in there, when you look at the ratio of altcoins compared to the 2021 season, there's not as much liquidity per altcoin. So I think that we're going to have narrative drives, and you're going to have your AIs, and you're going to have your meme coins. We did see a bit of a meme coin one, actually. If we just have a look at the bubbles very quickly, we've seen that we had Floki, we had Pengu, we had Pepe's run a little bit, and then there was, what was the other one? But I called this on my channel. I called that one on my channel. I said that why meme coins are exploding right now, and I talked about two of them, and then I'd said Floki was the one that was going to run next. If we just have a quick look at Floki now, just have a look on the 8 hour on that one. You can see this is where we got it. So got the break, come back down, retest. I'd said RS flip from this previous resistance level at this support base. You get this support base that manages to reduce your risk, and then you can bring your risk up. Then your rewards all the way up here. So that one's actually moved 21% to the upside so far. So all it does is it gives you the wiggle room, and it allows you one thing: stop loss break even. So if you put your stop loss to break even, what that allows you to do is use your capital elsewhere, because that trade's done. You could just ride that. You could trail your stop loss up. When it comes out in profit, but you could use that capital elsewhere on a different trade, try and rinse and repeat that. So, I mean, I've got rules built in place, Brad, where I can't take more than 2 or 3 trades at a time, depending on what account it is. So what that allows me to do is free up the liquidity to take more trades. So if I'd got a stops break even and I put in a new higher high and a higher low, then I'd put my stop at break even. I could use that capital elsewhere, and it allowed me to have 4 or 5 trades rather than 2 or 3, because the risk's reduced, the risk diminished on those 2 trades. It might come back down, I might make 100% profit, and it might come back down to 0, but I haven't lost the capital, preservation of capital. That was a bit of a tangent. So projections on Bitcoin, that was the projections on Bitcoin, and that was just using simple Fibonacci levels.
Beautiful. So it sounds like if you were, in your opinion, it's more likely, more of a higher probability that we would run up to 125 than we would go all the way back down to 90. Did I understand you correctly?
I think so, yeah. It took us a long time to get to that, but I think so, yeah. Because we'd have to come all the way back down to this 618. We've got some big barriers here, and I don't think that unless there was some kind of a capitulation event where it was like literally like this, a V-shaped recovery, and then like that, I don't think it's going to happen. But if this did happen, it was a V-shaped recovery all the way to a 1-to-1 equal measured move. Doesn't give you much time for the altcoins to run, and the altcoins do need a little bit of time to run. I said before, I think it's going to be hard and fast, but altcoins do need to run. So the 90 levels all the way down here, you've got your 618 support at 88,892. So if we broke through the bottom of this channel, if we broke through the 38.2 from this previous swing, if we broke through the 618 from that previous swing to the high, let me just stick some moving averages on here, see where they are. You've got your 200 moving average to fall back on here, Brad. You've got a lot of support before you get down to this 90,000 level. I don't think it's likely. So if I was to give a probability based on this analysis and the support that we've got and the resistance that we've got, I'd say that there's a higher probability of hitting this 1-to-1 at $135,000 than what we have going all the way down here at 90,000. Only because we've got that support here. We've got 20 moving average. We've got the 50 period moving average. You've got the 200 big daddy moving average. You've got this middle part of this channel here. You've got the bottom part of this channel here. You've got your 38.2. You've got your 618. You've got so much support. When you look at the resistance, once you're above all-time highs, Brad, haven't got any resistance. Who knows where to put the sell orders? Like literally, who knows where to put the sell orders?
Right.
When you're coming back down here, you know where to put the buy orders in, because we've got support, we've got previous data to go by. That's price discovery, my friend. So that means that there's no consistency of sell orders, which doesn't create a sell wall. Because if you were saying, right, okay, I'm going to short Bitcoin at 122,000, you've got nothing to go by. It hasn't hit 122,000 before. And then the next man's saying, I'm going to short at 118,000. And then the next man's saying 150, and the next man's saying 160. And then a couple of the girls come in and say 220. It doesn't create a consistency. It doesn't create that sell wall. So because psychologically humans don't understand exactly where to put these numbers because they can't look at the data, then there's less resistance than what there is support. So I think that there's a higher probability of actually going up and putting in new all-time highs than going down, Brad.
Awesome. Real quick here, I want to run over here, guys, and I want to show all of you Mr. Crypto Bullseye. One of his latest videos here was all about trading patterns on Polkadot. I put the link here into the chat. This will hyperlink you to this video. And one of the reasons I'm showing this to you is I want you guys, if you haven't already gone over and subscribed to Crypto Bullseye, I think just here in this first 20 minutes, you see what I'm talking about as far as Keith knows his stuff. He's not just a faker. He actually knows what he's doing. And he puts out some incredible information. This Polkadot video, 7 minutes of just pure gold, guys. So if you haven't subscribed to Crypto Bullseye, go check that out. You know, something else that I really like about you, Keith, is you're putting out videos like regular basis here. Polkadot was here. You have some meme coin videos, why meme coins are exploding. You know, huge crypto week ahead that will change crypto forever 3 days ago. So if you guys like content that you can watch on an almost daily basis, you know, Crypto Bullseye is a great place to go. You're really good at keeping your video short and sweet too, Keith. I appreciate that. You know, you can see 7 minutes, 8 minutes, 12 minutes. So guys, if you haven't subscribed to Crypto Bullseye, go check out that Polkadot video and get subscribed to Crypto Bullseye. And then while we're talking about that, I was kind of curious, as far as tokens that you like right now, if you were going to do some trading on some tokens, is DOT still one of your top choices to potentially be doing some trading on?
Well, I got the DOT hat on today.
Yeah.
So yeah, I've been talking about DOT a lot in the community. So let's bring up DOT. Actually, DOT is definitely one of the ones that I'm still looking at because we talked about as far as the higher time frames concerned. Let me just get this up here and fit that to screen. We talked about as far as the higher time frames concerned about the divergences, Brad. How you can see that we're putting in higher lows. We're putting in higher lows on the higher time frame. We're putting in higher lows on the RSI, and we're putting in lower lows on price action, signaling a reversal. And it's not just one divergence, it's a divergence here, it's a divergence here, it's a divergence here. Let's have a look. Got one here, you got one here, and you got one here. That's a big divergence where we're putting buy orders, buy orders, buy orders. So the RSI is a representation of actual buying and selling pressure. And you can see that people are buying Polkadot. The RSI is telling us, chart's telling us something different. It's putting in new lows. So we've come to a point now on Polkadot, and I do actually like it as far as the trade's concerned, because I said that we come back down to this level and retest this area here at $3.28. We've got one resistance barrier to get through at $3.60, but a buy around about here looks nice for me because stop loss is below this previous low here, 2.94. And then if you're out with a limited amount of capital at risk. So you've got your 236 resistance, which is acting as resistance all the way up here, and that's $7.93. Price action is currently at $3.38. So it's quite a big trade there, Brad. You've got your 200 moving average, that's going to act as resistance, but things don't just go up like this. So people that think that that's going to go to the 236 tomorrow or the day after, it's definitely not. You've got resistance, you've got to put swings in, you've got to put higher lows, higher highs in. So it's something that's a good entry as far as I'm concerned, because we've got that big signal as far as the divergence is concerned on the higher the time frame, the higher the time frame, the higher the conviction. I'll keep saying it time and time again. So that looks pretty good to me, and that is something that I'm looking at and I'm sharing with the community at the moment.
Okay, so I like that. So, you know, it sounds like even a significant move to the downside would be, say, a 10% move, taking it into the $2.90 range, where the upside is almost a double. You know, like if you're saying that the next major point of resistance would be up at, you know, over $7, it sounds like, as you mentioned in your video, I think you mentioned that the risk versus reward, it was something like 8 or 9 to 1.
8.25 to 1. 8.25 to 1 there, Brad.
I like the sound of that.
What that means is, and it is a difficult thing to say, but you've got to think about it. So psychologically, 8.25 to 1, what does that actually even mean? So you've got this trade. You've got this trade here. We've diminished our risk. We haven't diminished our risk. We've reduced our risk. We're trying to diminish our risk, and that's what we'll do when we put in a higher low. So you've got a good entry here. You've got an 8.25 risk to reward. That means if you imagine that you've got this setup here, and we've got this setup 8.25 times, you only need to win once, Brad, and that means you break even. So that means you've got 9 trades, and you need to win once, and you break even. Anything over and above that, you're profitable. Now what's that, Brad? That's like a 13% win rate.
Yep.
Like, you imagine being profitable with a 13% win rate. It doesn't seem right, does it? But that's just flipping the mindset. So a lot of the most profitable traders in the world, Brad, they've only got like a 33% win rate, and they lose 2/3 of the time, and they're the most profitable traders in the world. And it is kind of flipping your mindset to say that you're going to lose twice and win once. It doesn't really sit right with me. But I mean, you look at that and I look at that, and I can't take that trade 8.25 times because that's not going to set up 8.25 times like that. But when I look at it, and I think from a risk to reward perspective, it looks good to me. I've reduced my capital. There's my reward. I could play it along the way up, even if it gets a rejection here at the 200 moving average, sat at $4.72, $4.77. You would have put a swing by then, got a rejection, you would have put your stop up here in profit. So because you put your stop in profit, that means that you haven't just reduced your risk, you've diminished your risk, and you've managed to bank your reward no matter what happens. Worst case scenario, best case scenario, you go and put another swing up, and then you go and do this again. And you put in a new higher low. Carry on the trend until the bend at the end, but the bend at the end will end. So you just manage and manage and manage. By doing that and continuing to do that, it allows you to free up capital elsewhere, basically. That's the aim of the game. So it is a patience game, guys. And I'd said on this dot thing, if you can wait for it to come back down to this support base like it did, it's going to be better because you can reduce your risk, increase your reward. It doesn't have to be that big, guys. You don't have to shoot for the 236. If it's a short-term trade, you could even go up here. What does that do? 2.4 risk to reward. Still not to be sniffed at. You can even continue to reduce that even further if you think that it's not going to break down below that previous support base that it's held for 1, 2, 3, 4, just over a week. So there's lots of things you can do to manage risk, and it is all about managing risk, and to manage risk and to understand risk and to preserve your capital. Unfortunately, a lot of the time you just have to wait.
Yep, fair enough. Any other tokens on your radar that you really feel like have a really good setup at this point in time?
I do, actually. This is massively winging it this morning. This morning for you, this afternoon for me. Right. What do you think of this? Shiba Inu. We've seen the meme coins running. So we've got Shiba Inu. This goes back all the way to 12th of May 2021. 4 years and 2 months. So we've got 4 years and 2 months in this trading pattern. Call it actually 2021, the major part, this here. So you can see how this has been respected. Shiba Inu, we've dropped. We put the fixed range volume profile on here. You can see this is the biggest area of traded volume. Look where price is now. Pretty much touching it. Biggest area of traded volume within this 4-year range. Now we're creating a pattern here, which is a wedge pattern. Now what this is doing is coiling up and coiling up and coiling up, and you can start to see one thing happening. I was speaking to my friend earlier on about this because he's invested in Shiba Inu, and he said, nothing's happening, I'm getting bored. And he was considering selling it because of this, Brad, this chop that lasted for 22 days of doing nothing. So he's bored. He was thinking of selling it, and he's held it for years. And I said to him, just wait. You're at the bottom of something, of the biggest area of traded volume. You're in a pattern that's been in a 4-year pattern. Once that pattern breaks out, you've got a resistance here, 0.00003172, and then 0. Loads of zeros, 4, 5, 6, 3. But then when you look at that, the volume's diminishing massively. So when Shiba Inu gets above this point here, there's no area of traded volume between this bit here. No build up of price action, no build up of price action. So that's when it starts flying through. That's why I like that trading pattern at the moment on Shiba Inu. I really like that trading pattern, actually. So I'll tell you something similar, Brad. And I always say to people, go back and watch me on this one. So XRP, let me just find XRP. It's here. XRP. So see this wedge pattern here. I called this back on my channel. Go back, guys, to watch my channel going back between the 8th of October 2024 and the 21st of October 2024. I did about 3 or 4 videos saying that this is the biggest trading pattern within the biggest time frame within the whole of the crypto market. This was XRP. That was XRP. What happened on that was we got such a big breakout, and that breakout from where price action is, because we were below here, guys, where price action was to the upside, 530% on that break. It's in a consolidation trading pattern now, and it's looking like it's a bit of a pennant. So waiting for a break to the upside on XRP. But what I'm showing you is similarities between what I've seen on this Shiba chart here without the break. Now, when I look at XRP, I look at Shiba, 2 completely different things. XRP is being adopted. XRP is going to be part of our banking system. XRP's got massive utility behind it. Shiba's a meme coin. Shiba has got some utility behind it, but what that means is XRP's obviously got a lot more use case behind it. It's more of a blue chip. It's got a higher market cap, runs a lot earlier because the blue chips run a lot earlier after Bitcoin. So you can see that this is lagging in comparison. And if we do get anything like the XRP breakout, even testing these previous all-time highs, if that happens, 630% to the upside. Because when we break this barrier here, when we break this barrier here, there's little resistance. I can see little resistance on that. Is it going to happen tomorrow or the day after? Probably not, guys. You've got to put swings in. But I do like Shiba Inu. I mentioned Floki earlier, didn't I? What have we got? Bonk's been running. Let me just zoom into the daily. Seeing that Bonk's been running. So I put in a fib extension on Bonk. So I've got some projections here. One thing that I like about Bonk is it has just taken its 200 daily moving average at 0.0001871. That's got support to fall back on. So that should hold support. We've hit a resistance barrier here, which coincides with this here. So we're at a top. If we just look at the indicators, you can see that we need to pull back. And I'd said on my channel that we need to pull back to, that was the meme coin video from a couple of days ago. So we need to pull back, all the way down here. This needs to hold the 50 level. So we're expecting to pull back here, but we've got the big daddy to fall on. We haven't just got the big daddy. We've got the 50 and we've got the 20. And I'm going to show you what's going to happen in a minute on this. So we're going to pull back. This is my crystal ball. Watch it next week. It'll be completely different to what I said. So
fair enough. Fair enough.
This is what I think is going to happen. This is what I think is going to happen, Brad. We're going to pull back. We're going to pull back on Bonk. We're going to hit this 200 daily moving average. We're going to get a reaction from this 200 daily moving average. And as we're pulling back towards the 200 daily moving average, our stochastic is going to come back into an oversold position. Of course, maintaining a higher low. You've got a structure here, which is sat at naught. I'm going to skip the noughts and I'm just going to say 1736. So you've got 1736 to fall back on. But what's happening here, Brad, is something that I call the traffic light system. And what's going to happen here is this 50 is going to curve up. The 20 is going to curve up above the 2 of them. Then the 200 is going to flow underneath. That's going to create what I call the traffic light system. The green at the bottom, the yellow in the middle, the red at the top. You see what happens here? There's the traffic light, green, yellow, red. See, there's not much data to go back on Bonk. It's quite a new token. Let's go on a different example. Let's look at it on Shiba. So you can see on here, look. I think I've got a bit of a cold coming, so got a bit of a sore throat, so apologies for that. So you can see here, guys, when you've got the green at the bottom, the yellow in the middle, and the red at the top. 20 period moving average is the faster pace moving average. 20 period moving average is 20 candles averaged over a period of time, which creates that consistency and that line. 50 period moving average, that's 50 candles. So you can think 50 candles consolidated rather than 20 candles. It's going to be slower paced. And the 200 moving average is obviously the big daddy. They call it the big daddy. That's 200 candles, and that's slower paced and that's slower moving. So that's why above the 200 you're bullish, below the 200 you're bearish. But when you do get this traffic light system in play, like on Shiba here, when was this? February 2024. You see the big acceleration in price, which was 386%. That move. Even this move here was pretty big. Doesn't look it. That move there, 209. But these meme coins are probably not the greatest example for that. I mean, if we look at Bitcoin, you can see it a little bit more clearly. See what happens when you've got the traffic light system in play. Green, yellow, red, boom. They act as support all the way for the bull market. Let's go through the bear market. What's this? November 2021. You've got green at the top. When you've got the yellow in the middle, the red at the bottom, boom. Resistance, resistance for the whole of the bear market. So that's why you can use the moving averages as support or resistance, as additional confluence, and just understanding that those three key setups where you've got the 200 at the bottom, the 50 in the middle, and the 20 at the top, then that's your directional bias. That's bullish. And was there any other questions? Did you want me to have a look at another couple of altcoins? I'm actually winging this at the moment. We've got
I have a question. So, kind of excuse my ignorance, but one of my favorite YouTubers, a guy named Crypto Life or Sam Price, is one of his main models is he is always talking about how he waits for the trend to break above the 200-day moving average. Yeah. And then he puts in his trade. He'll long things, and he has an incredible track record, really just with that one indicator, just waiting until things break above the 200-day moving average. Even on Bitcoin over the last few weeks, he's talked about like, well, it's getting close, and then boom, Bitcoin will break the 200-day moving average. He will throw a trade in and let everybody know in his Discord group that Bitcoin just broke the 200-day moving average. And it's amazing to me how often he is right and it gets a pump. Now, he's good enough to make money on relatively small moves. Like he might believe that it's going from 107.8 only going to go up to 108.4 or something like that. It's not a huge move, $700-800 upswing. Mm-hmm. But when he's trading with like 28x or 25x leverage and throwing in a decent amount of money, he makes some pretty good money. I don't know if you consider that called scalping, but I'm just wondering, for those of us that don't know exactly how to figure out the 200-day moving average on a token and how to set an alert for when that gets broken, can you maybe go through some of the trading software that we might want to get? And just if I wanted to go on my computer and look at, okay, what is the 200-day moving average on Bitcoin? What is the 200-day moving average on Polkadot? So how would I even figure out what that 200-day moving average is so that I could be paying attention to if it got broken?
Yeah, no problem, mate. So your friend would be up 22.57 if he was using the daily at the moment. A lot of things that a lot of people do. Let me just get in a bit of a cleaner chart here. In fact, we'll get a new chart up. This is a good question, actually, Brad. There we go. So we've got a clean chart. What I'm going to do is just get rid of these indicators. I'm going to do it together. Right. Firstly, your friend, Brad. It'd be interesting to understand what his exit strategy is. It can be scalping, depending on what time frame he's on. If he's on the daily, it probably wouldn't be considered as scalping. But if he's on a shorter time frame and he's doing it over a shorter period of time, and he's taking his profits out at over a short time period, it probably would be scalping. A lot of time, when people use simple moving averages, they'll wait for a break of the 200 moving average, and they'll wait for an exit position of a break down from the 50 moving average. And we can do that together. We'll add them on now. So moving averages, we talked about what they are. 50 is collectively 50 candles averaged out. 100 is 100 candles. So you get the gist. So what we're going to do is bring up some moving averages. I want to show you a little trick, actually, because if you go on a TradingView, and I'm not affiliated with TradingView in any which way, but I do recommend that people go on to TradingView or a similar platform so they can actually look at the data and try and identify clues themselves. And that is part of your self-development. One thing with TradingView, you get 3 indicators, Brad. 2 indicators maximum with the free plan. So I highly recommend you just get the free plan. Don't get a paid plan, just get a free plan. You're just learning, you're not putting real money in, you're trying to follow the charts, trying to understand the charts. So get a free plan. So if you are using 3 indicators, i.e. the 20 period moving average, the 50 period moving average, and the 200 period moving average, that's 3 indicators. TradingView allows 2. One thing that you can do is you can just go into indicators and you can type this, which is the 3MA. If you type in the 3MA, you get a little something like this. For some reason, one of them's gone. Right, so for some reason, the 20's disappeared. Let's try and click on that. Plot 1, there we go, the 20. Right, there we go. So you can see that within using one indicator by just clicking on that 3MA, I've got a 20, I've got a 50, and I've got a 200. So I've actually got 3 indicators in one. So I can then, guys, if you're using the free one and you're only allowed to use 2 indicators, that you can then bring the stochastic RSI up. You can bring up the RSI up, whatever it is that you're using. Whatever it is that you're using. So that's a way that you can use all of those 3 moving averages as well as using an additional indicator for nothing. So the moving averages, this is what I mean, Brad. So if someone breaks the 200 moving average, let's take this trade here. You've broken the 200 moving average on the daily. What I was mentioning is the 50 moving average, a breakdown on the 50 moving average. So this is where you get a breakdown on the 50 moving average. So you can see here that you haven't took the top. We can't pick tops. Nobody can pick tops. However, if you take in a trade to the 50 period moving average, that would have been a profit of, in this example, if you got it from the break and you took it there, 17.87%. So your friend that's taken leverage, that 17 point whatever percent can be 150% or whatever kind of thing in a short period of time by just using simple tactics and by just using, get rid of that again, get rid of the 20, that example that we were using, we don't need the 20, by just using 2 moving averages. So when you get moving averages up on TradingView, let me just reset this because it doesn't look like this when you first get it up. So let's do this together and you can get your charts up and you can follow me on this, guys, reset settings. So get rid of this and then we'll do it together because it does look a little bit differently. And here's a little trick that you can do. So we're bringing up the 3 moving averages, 3MA, type that on there, click that. And it is actually, it's because I've saved it as default, but what you'll get anyway, let me walk you through it. What you'll get anyway is you usually get a 9 period moving average, a 12 period moving average, and I can't remember what the other one is. So remember that's 9 days, 12 days, and whatever the other one is. So when you've clicked your 3MA and it doesn't look anything like this, you can double click on that, and then that brings up this. And what you can do is you can just change the colors because the colors look different as well. I like to use the traffic light system. So I like to use the 20 as red. I like to use 50 as yellow or orange. I like to use the 200 as green. And then you can go on to inputs. If that was 9, it looked like that. See how it's faster paced now, Brad?
Yep.
So if you just double click that again, we put that back to 20. So this is all you're touching. You're using the top one here, 20, middle one here, 50, bottom one there, 200. That looks confusing. It's not. Go into style. Pick the colors that work best for you. So pick your own colors, 20, 50, 200, pick your own colors. So it's as simple as that. And that is just a simple strategy. A lot of people do profit from that, Brad, by just taking profits from the 50 moving average when they break down from there. And if you're in an uptrend and you broke above the 200 moving average and you've got the 50 pace moving average, which would be in that example above the 200 moving average, then that means that if you're actually taking the break, that means that you're always in profit. So it isn't a bad strategy. However, it is very simple. And I mean, there's a lot of circumstances here. I mean, would you take it here because we breached it down here? Would you take it here because we breached it down here? At some point, that candle was red all the way down here. At some point, that green candle was red all the way down here. So there's lots of subjectivities. Do you want a break and a close? If so, you're down here, which is reducing your reward. You're taking it from the break there. You're waiting for a candle close. That brings it down to 16.89. So there's lots of different ways that you can do it. And there's lots of different people that do it different ways.
Appreciate that. Now, I know my friend is, an optimist. He is a, bullish on crypto in the long term. So he probably trades, I'd say he probably does 8 or 9 longs for every time he shorts. Like, he's one of those guys that he's willing to take a little bit of a riskier setup on a long than a short. So in order for him to short the market, he really has to be pretty darn confident that it's going down. If he's not super confident, he'd rather just stay on the sidelines until he really knows, or believes that he knows what's happening next. Where, like I said, there's times where if everything is looking good, he'll break his own rules every once in a while and jump in as it's getting close to the 200-day moving average, try to front run it a little bit, but he'll never do that like with a short. With the shorts, he always makes sure that he has lots of confirmation that it's probably headed downwards before he makes a move on the short.
Yeah, exactly the same, mate, completely. It means that it's been a bit boring for me and your friend.
Yep.
This year, because we haven't really had as much upside as other than Bitcoin, that is. So we haven't had as much upside as what we'd have liked. And I'm completely the same. I'm not too much of a shorter. I mean, during the times of like when we were going through 2022 during the bear market, I did make money short in the market then. But it's not as easy as people think. Everyone thinks just short the market when you're at the top, and it's not as easy as what people think. And people think that shorting an altcoin and saying that I'll short this altcoin after 2x from here kind of thing, and if I get hit, then that's definitely going to go down. I'm going to ride it all the way to the bottom of the bear market. But we know that altcoins can do 3, 4, 5x in a week, and all you need is 2x liquidity, and you've got a 2x short. All you need is a 1x on top of that, and that means you're liquidating. It's just so difficult to predict. When you've got the volatile blow-off tops, the blow-off tops are there for a reason, to wreck everybody, and that's why most people can't catch them.
Absolutely.
Yeah, as far as your friend's concerned, I'm pretty similar. I'm not a massive shorter. As far as crypto's concerned, we're in a long market, and altcoins, they're probably more sideways. You don't get too much gains when they're in the accumulative phase, because it takes a lot to build an altcoin. It takes like 3 years to build an altcoin for a few months of a run, and then runs are really hard and they're really volatile, because we just can't have that much on risk at any given time within the market, because there's not that much liquidity into the market. So they spend their time building and building and building. The higher risk ones get battered 99%, and they'll still build and build and build. You see things like even Polkadot. Let's have a look how much that one's dropped.
Yep.
Polkadot, because I've seen Polkadot on a list somewhere that was something to do with the United States, and I'm not going to say what it is because I can't actually remember, but I'd seen that it was in a list of along with the big blue chips like Cardano and things like that. So we've got,
I tell my community a lot that one of the most exciting things about episodes like today and just this Trader Tuesday in general is I do believe that we can use, some of our bankroll. I recommend that most people use the majority of their funds to buy spot and to hold long term, but that they should, if they want to do some trading, that they can take maybe 10% of their bankroll, 10% of their investable funds, and by learning these strategies can add significantly to the profitability of their portfolio. But one of the things that I'm always saying, Keith, is that in my opinion, what we're learning right now is going to make us some money on the way up. But I am pretty excited about if and when we go into the next bear market. In the past, I've either kind of rode my crypto down or just had to sit there and kind of dollar cost average.
Yeah.
I'm super excited. I think there's probably more money to be made when we get to the peak of this bull market, and then we're able to start shorting things all of the way down in 26, 27, 28. I think there's a lot of people, if they do it right, that can make more money in the next bear market than they might have made in this bull market.
Yeah, I mean, if you're talking like high risk altcoins, a lot of the time, Brad, there's not much liquidity into the exchanges. So unless it's a big exchange, it's quite difficult, because you'll get scam wicks. to the upside, scam wicks to the downside. But you're completely right when you're talking your Solanas, you're talking your Ethereums, you're talking your blue chips. Once you've put that lower high in, you've got a confirmation that that's it, the bull market's over. Yeah, that's it. It's fair game then, isn't it, Brad?
Yeah, absolutely. I'm looking forward to it. I've never really shorted the market. I was in the market in 2017, 18, just had barely really gotten started. Didn't have any idea what longing and shorting even was. And then the same thing in going into 2021, I made a lot of money on the way up, but I didn't know how to capitalize on the markets in 22 and 23 when they went down. Just like you were showing Polkadot here at over 54, like $54 a token, $52 a token. Can you imagine had you started shorting that baby back in November, December, January of 21 going into 22? There's a very real possibility that you could have hit it and really probably been able to ride it down for, months if you wanted to. You could have literally got a trade in. And as Bitcoin went down and Polkadot went from 52 down to 40, down to 30, like you might have been in a spot where you could just continue to kind of lower your stop loss and never, ever have to worry about, not making some significant money. And some people probably did make a lot of money riding stuff from the peak all the way relatively close to the bottom.
Yeah, exactly that, mate. Yeah. And it is just flipping it in reverse, what we were talking about earlier, isn't it? Where you're bringing your stop loss down, like you mentioned.
Yep.
You're just bringing it down, putting it up.
Real fast, I want to give a shout out here to Mr. Daniel Prosper. So this gentleman is actually a teammate. He works for the Infinite Crypto YouTube channel. For those of you that like my live stream AMA interviews, this gentleman here is responsible for most of them. He spends most of his day researching and reaching out to cryptocurrency projects on our behalf. And so instead of waiting until tomorrow on the Microcap Gem to take a look at Dash, would you mind pulling up Dash and taking a look at the charts and seeing what you think? And while you do that, I'm going to run and use a restroom real quick. I've been doing a program called 75 Hard, where I'm drinking a gallon of water a day. And so I'm going to pop my camera off, let you talk about Dash for a minute or two, and I'll be right back.
Let's have a look then. So what have we got? I didn't think that I'd actually looked at this one before, but looking at it, I possibly have, because it was actually pulled up. So, all right, then what we can do. So we're on the daily on Dash. Let's have a look. Take off this mess here. And what we'll do is we'll just stick in our support. We'll stick in our resistance. We'll take off the moving averages for now. Whoops, butcher that. Take off the moving averages for now. There we go. Right, okay, we've got rid of the noise. Zoom out onto the weekly. We need to find out where the structure lies. So we're going to look at where the structure lies. And we're going to add in our support, and we're going to add in our resistance point. So you can see, first and foremost, what we're doing is we're joining up the dots. Remember, guys, we're just joining up the dots. The most touches, the most chance that it's going to get a touch going forward in the future. So this is going to be the first area. Just pull that down. That's going to be your first area. That's sat at $41.53. Dash is trading at $20.07 at the moment. So let's see where the next support base is. Got the support base here. This is the support base that we dropped. In fact, we've got more of a diagonal happening here, haven't we? Got more of a diagonal happening here, where you got lower lows, lower lows, lower lows, just slightly. Have we got a divergence? Let's have a quick look. So you can see, going from here, guys, you've got a divergence on here. So very similar to DOT, where you're talking about this big divergence here on the higher time frame. You've got exactly that divergence on DOT. Problem is these divergences. There was one divergence here. There was one divergence here. There was one divergence here. Guess what? Another one here. However, that is a period of 99 weeks. 99 weeks in this range here. So is it going to happen tomorrow? Is it going to happen next week? Each one of these candles is 1 week. What we can do is we can just do this. We can wait to find out when we've got momentum. In fact, we can do it on this level here. The more sticking points, the better it is. So once you get a break of trend here, in fact, you could probably bring it up and say that you've had a slight break of trend and you've got a change in momentum, because we've had one thing here, had a bit of a cross on the stochastic on the weekly. So we've got a bit of a bias here now. We're looking bullish. It's looking bearish on the chart, but we're actually looking bullish on the indicators. So we need something to happen now. We need to understand exactly where the next area of support is. We've got our resistance point built in. We can build in our support. You can see this price action here. Once this is breached, hasn't been breached in 1, 2, 3, 4, nearly a week and a half. So that hasn't been breached in a week and a half. That's going to be support. That's set at $19.19. The actual big support is going to be down here below this previous low at $17.14. Also, it's going to be this trend line. So the way that you can play this, two ways that I play this. So we're back on the daily chart, back in the shorter time frame as far as the macro is concerned. You can wait for this to pull back a little bit, come back to this support base, and you can do one of two things, depending on how much risk that you want to allocate, depending on how much reward you're looking for. But what I like to do is swing for the previous swing high. That was here, lower high. So you've got a 3.98 risk to reward. You pull that down here, what does that do? 3.24 risk to reward. So if you pull back to this support base here, that looks good to me for a trade to this previous lower high. From an investment perspective, I mean, this was just last year, December 2024. That's when we were talking about the relief rally. So that sat at highs there, 71.63. You would expect to come back and hit that at some point from an investment perspective. From a trading perspective, you're zooming in, you're looking for more conservative levels, you're looking for higher probability moves. So if you're waiting for price to come back here, and then you get a reaction at this point, you get a reaction, you get some kind of a build up of price action here. What that allows you to do is to understand that this is going to be your area that you don't need to break, and you can reduce your risk down. What happens if you're wrong? Wrong, less amount of capital. What happens if you're right? You've got more reward, less risk. So it is a waiting game on that one. I do want to come back down to this support base, and to be honest with you, sometimes they do come back. They'll sweep this low, they'll come back and get bought up quickly. So using that, it's less conservative. Using that, more conservative. But it is all about how much risk that you want to allocate to it. If you're using leverage, charts getting messy now. Clean these up. If you're using leverage, what's the difference between using leverage and not using leverage on this one? So pretend this has happened. We've come back down. Price has come back down here. Now we're going to 10x this bad boy. In fact, no, we're going to 20x this bad boy. And we're going to 20x this bad boy to this previous resistance point, which was this lower high here. Now, does that make sense to you? You've got a 3.09 risk to reward. Now that is based on spot. You add leverage on there, that risk is going to be, in this example, 20 times more. So that 10% is going to be 20 times more capital than what it would be if it was a spot trade. So if you're using leverage, then you have to look at these lower levels. You have to zoom into the smaller time frames. You have to find out what areas acted as previous support. You have to put your stop losses up. You have to use more protections because you're risking more. So there's different scenarios for different things. Spot buys are different to leverage trades. If it's leverage trade, you need to protect yourself a lot more.
Wonderful.
That's Dash.
Do you use limit orders much with your leverage trading? In other words, are you usually just on your computer looking at the charts and you decide to make a move, or do you ever, like potential like with Polkadot, do you ever just go in and say, okay, I like Polkadot right now, but if it were to drop down to say $3.29, I'd really love it. And so rather than having to sit there and watch it, you just go ahead and place a trade ahead of time and see if it ever goes down and executes?
You can. I mean, sometimes I'll do that, Brad. And what I'll do is if I haven't got the time to look at the charts and I want to take out a position, I'll do that with a low position and low leverage, just so I can see the flow of what's happening. And then I can add to the position or I can protect myself accordingly. But it's a naughty thing to do, but to be honest with you, and you mentioned about your friend breaking his rules before, that's sometimes when I'll break my rules because I'm going out for the weekend and I've seen something like Shiba and pretend Shiba was in a range that was just about to break out. It was in a range that was just about to break out, and I thought that Shiba was going to break out within the next few days while I was away for the weekend and I had no access. I just put a small amount in just so I could just keep an eye on it and keep an eye on it if it's going up, if it's going down, if it's holding its range, if it's losing support, and then that capital that's going to be there, which it can be literally $10, Brad, kind of thing, just so you can keep an eye on it. And then I'll adjust my position accordingly, because the position that I'm waiting for, which is the rules, that's the one that hasn't happened yet. So that allows me to just keep an eye on it to understand exactly when I can build on that position. And I do tend to increase the leverage when I do get some breaks. Once I'm in profit and I've brought my stop loss to break even or above break even, that's when I'll start increasing my leverage from 3 to 4 to 5, all the way up to 10, sometimes to 15, but only when I've capitalized on most of the trade. So if I've taken 75% of the trade, then I'm quite happy to build a small allocation with a higher leverage, understanding that I've already banked the rest of that trade. So the worst case scenario, you're losing 25% of that trade when you banked 75%. If you made a good 75% on there, worst case scenario, you kind of break it even on the 25% because your limit order's right to break even, and then you're increasing your leverage. So you can either get a good result out of it, or you can break even on your last 25%, but it's good to just have that skin in the game just to see if the trend does continue, because you can adjust it. I mean, if you get some kind of super trend, he says super trend, if you get some kind of a super swing, you can get the pullback, and then I'll increase it again on the pullback and just wait until the trend ends. But it's all about making sure that you're banking the capital, putting that aside. Then you can increase your leverage as you reduce your risk. If you're going to go 20x straight away and just mention what you just mentioned, and I said, I'm going away for the weekend, 20x leverage, I'm going to stick 4 grand on there, 5 grand on there, that'd just be irresponsible, because I haven't got no protections in place. If I've got 20x leverage, that means that I've only got 5% wiggle room. With crypto, that's a day. That's a day, 11%, 10%, 21%. 4.8%. So do you know what I mean, Brad? We see 5% happening in an hour, don't we? So it's irresponsible to start off with a high leverage. However, it's nice to build a position safely, mitigating your risk, and then increasing accordingly as the trade progresses, and making sure that you're banking along the way as well. Because what you can do is you can take, if you've got a 5x leverage, you can take, say, 50% off the table, and then you've got 50% remaining, and then you've got another swing to the upside and you take the other 25%. You can, rather than having that pot of 75%, which just pretend it's $5,000, you can then just take $500 of that $5,000 and then put a higher leverage on that, understanding that that can do exactly the same as what that previous allocation of capital that you've already banked has already done. So you can try and build that with a high leverage, understanding that you've minimized your risk by putting your stop loss to break even on the final 25% above the previous swing low. And you can just, like, literally, you can go as degen as you want. As long as you've mitigated that risk, you can go as degen as you want. And that pool that you've already banked, that small few $100s out of that pool, can do exactly the same as what the previous high allocation can do.
Okay. I like it. I like it. Well, let's switch gears real quick. For some of the people that are watching the channel that are maybe a little bit newer and you wonder, what is this Agape, infiniteagape.io? And so, guys, for those of you that may not know, not only am I the founder and the owner here of the Real Infinite Crypto YouTube channel, but I'm also the co-founder and CEO of the Infinite Agape token. And today's a pretty exciting day because we're actually right in the middle of our second round of nominations and voting. So with the Infinite Agape token, every 2 weeks we have a nomination round and a voting round. And what you get an opportunity to do if you own $777 worth of the Agape token, you actually get to come in and nominate a token every 2 weeks. And then if you own $77 worth of the Infinite Agape token, you get to vote on the nominated tokens. Now, the nominator, the person that nominates the winning token, gets $500 in Infinite Agape tokens. And then the voters that have $77 worth, the voters that voted for the winning token, get to split up the rewards pool. And we're doing something a little bit different this time because the rewards pool is a little bit lower than we would like for it to be. So we're also going to make sure that we're going to be giving all of the winners of this voting round some infinite Agape tokens to make sure that you are getting a good return on your investment. But I just wanted to share with everybody that's watching, we had 7 nominations this time. So our first round, we just launched this token on May 25th. On our first round, we had 5 nominations. Now we're up to 7. But one of the things that I love about this project, guys, is you've got 7 tokens here that you can go do your research on, and potentially some of these tokens could make good additions to your cryptocurrency portfolio. So one of the utilities of our token is the fact that we understand that there's 20, 30, 40,000 new cryptocurrencies out there, and it's near impossible for any one person, even a team of people, to really keep up with everything that's going on in the market. But the Infinite Agape token has over 100 holders and growing rapidly. So we have a lot of eyeballs, a lot of people looking at great projects. You know, like this Gains Launchpad is a pretty cool project. I really like Solidus AI Tech. But like Build on B, this is a new one to me. I'm excited to check it out. This Galeon is also a new one to me. Bricken and Script both got nominated in the last round. So I had an opportunity to take a look at those. And Bricken, we actually featured on one of the Microcap Gem live streams. So folks, it's 10:30 in the morning Pacific Standard Time. So we have about 21 hours until the voting is cut off. And so what we're going to do is we're going to give out to all of the people that vote for the winning project, we're going to go ahead and give them at least $50 a piece in Agape tokens. So right now you have an opportunity. You can go buy the Infinite Agape token. And the easiest way to do that, I'm going to throw this into the chat for those of you that are interested. You go buy the Infinite Agape token by just going here to the website. And then, you know, like you're going to see about 19 places where you can buy tokens here. And if you click that buy tokens here button, it's just going to take you right to PancakeSwap. It fills in Agape. It fills in USDT. You could switch that, though, to BNB or USDC or several different tokens, and it will get routed back to and get your Infinite Agape tokens bought. So if you go buy $77 worth of tokens in the next, you know, in the next 21 hours, you'll actually be able to go vote on one of these 7 projects. And if you vote on the winning project, so it's 7:30 in the morning, 21 hours from now, this will show a tally of how many votes were for each project. You can see right now, guys, there's only 12 total votes. I'm guessing that we're probably going to get up closer to 25 or 30 votes. You know, but last 2 weeks ago when we did this, the winning token got 7 votes, and they all earned $97 worth of PancakeSwap. We're going to guarantee a minimum of $50 in Agape tokens. So if you go buy $77 worth of tokens and you vote for the winning token, you're guaranteed $50 of your 77 back. And in fact, Keith, you voted for the right project 2 weeks ago, right? You got one of those $97 airdrops?
Yeah, I did, mate. I've got a bit of an itchy head at the moment. Yeah, sorry about that. Sorry, it's just a bit of an itchy head. Yeah, I did, mate. Yeah, I got I got it right, didn't I? Yeah, I got PancakeSwap.
Awesome. And then this time around, Crypto Bullseye is a 777er. He went out and has gotten $777 worth of the token. He's been promoting the token to his community inside his Discord group, which I did just put a link to his Discord group here in the chat a few minutes ago. It looks like, man, I'm having trouble finding where I did it. I know it's here, not too far away. That's the Infinite Agape website. I don't want to do that. Where's the next one? Here we go. So for those of you that want to join Keith's Discord, he's got an amazing Discord. Over 300 people in his Discord. Very, very active. They are chatting and talking a lot in there. So go join his Discord group. But this shows the power. Now he's got the $777, and one of these tokens is his. And if he wins, if his token wins, he's not only going to earn 500 in Agape, but he's also going to get at least a minimum of another $50 airdrop of Agape, because I'm relatively certain he's going to vote for the token that he nominates. So it's a pretty cool situation, guys, where for a $77 investment, every 2 weeks you get an opportunity to win an airdrop. And if you do have the funds and you get up to the 777, every 2 weeks you have an opportunity to win the $500 and potentially pick up an airdrop. So I just wanted to, I've been trying not to plug my own token too much on the channel. I don't want you guys to just feel like you're getting beaten over the head. But at the same time, this is a project that I'm super, super excited about. I think it's got a lot of utility, and it's going to help put good investor eyeballs on some great projects. And it's kind of a win-win-win. The projects get new eyeballs on them. The winning project also gets to come onto the channel for a free live stream AMA, get introduced to all of you. And then you guys as community members get an opportunity to find great investments, tokens that might be very investable. And a lot of these are low cap gems. Some of them aren't super low, but some of them are really low cap gems where they're high risk, but also high reward. And then on top of that, you get an opportunity to win airdrops basically every 2 weeks. And you literally have to win one airdrop, and you're pretty much in the black, for your $77 investment. So I'll shut up now, but Keith, do you have anything to add? Is there anything about the Agape token that I missed, or that you would like to, mention to the viewers?
No, I think we're having quite fun in our Discord group, and you mentioned and you touched on our Discord group before, so thank you about that, Brad. But all it is a bunch of friends in there. I don't say it's a calls group. I say it's a bunch of friends that understand that we're trying to make something in life outside of the normal monetary system. We all talk to each other about life. We talk to each other about crypto. We talk to each other about trading. And now the Agape token is one of the hot topics. So it is quite fun, to be honest with you, Brad. And it is something that my community's took a bit of a liking to. So we have got a few investors within our community, and there's possibly a few on the actual chat now. But no, I know that a couple of them have voted, potentially biasly, but I know that a couple of them have voted, Brad. But it is a fun game. I really enjoyed it, and our community is really enjoying it as well. And like you say, just once, you just need to win once, and that means you break even, you're in the black pretty much, depending on the circumstances. But we're only in week 2. We're only week 2. So week 1, we've seen. We're in voting round 2. So we've seen in voting round 1 that you'd had mentioned seven different votes, was it, in round 1, and there's 25 we're expecting in round 2. So we're seeing growth between the first one and the second one. There's a lot more nominations in the second round than the first round, so there's more to choose from. And it is quite nice looking at some of those cryptos, actually, because I haven't seen a few of those before, so it'll be interesting to look into them and research them myself.
Yeah, absolutely. And and we'll see what happens, but as there's more nominations, there's a possibility that the number of voters can fluctuate, but it wouldn't surprise me if 5 or 6 or 7 wins, the vote again. So it's an opportunity, especially as we build some momentum. We just crossed 100 holders. As we build some momentum, when I put this token together and we were, looking at the future of it, we really believe that the buy and sell volume is going to increase dramatically in the near future. We've got some marketing going on and some special things that are happening. And I really believe that these prize pools should get up to $2,000, $3,000, $4,000 every couple of weeks. So, if you're looking at a $2,000 prize pool divided by 5, 6, 7 people, you're looking at potentially getting an airdrop of, $200 or $300 worth of the token that you voted for. And, normally I'm going to assume that if you voted for the token, you're probably pretty excited to end up with some of that token, airdropped into your wallet. So I think the future is bright. We're working really hard. And, we're attracting some great people, including you, Keith. I mean, you saw the vision you know, relatively quickly. You jumped in, you've been a huge supporter, and we definitely appreciate, you know, the heck out of you. So, yeah, guys, go join his Discord group. Go, you know, get involved with his YouTube channel. And with that, Keith, though, I think we are going to wrap things up here. I know it's getting a little late, so I'll give you an opportunity to go spend some time with your lady and relax. I'm going to go do my first workout. So this 75 hard program that I'm doing. Yeah. Oh, we got a giveaway to do, though, real quick, too. So, all right, guys. Yeah, so we should. I don't want to forget about the giveaway. You guys have been great today. We appreciate each and every one of you. So on that note, let's do the giveaway real quick. I'm sorry, Keith. I forgot all about it. Let me go back over here and let's go. So housekeeping. I don't want there to be any confusion this time around. I had somebody put in their Ethereum wallet address and then try to come back to me later on and say, hey, I never got my tokens. So I went back and I said this 2 or 3 times on the last video. The Agape token is on the Binance Smart Chain, and you need a decentralized wallet. Do not give me an exchange wallet. You will not get your tokens. You want to use a MetaMask, a Trust wallet, a Rabbi wallet, or Rabbi. I never remember exactly how it's pronounced, but you want to use a decentralized wallet, and you want to give me a Binance Smart Chain address. Now, for the person that gave me the Ethereum address, if it was a decentralized wallet, you should be able to add the Binance Smart Chain network to your MetaMask, because for those of you that don't know, yeah, of course I'm not signed in, but you can toggle on MetaMask through multiple different EVM chains. Your send to address stays the same. So all you have to do, if you're that person, if it was an exchange address, you're probably not going to get them back. But if it was like a MetaMask and you just gave me what you thought was the Ethereum address, you can go to your MetaMask and add Binance Smart Chain, or go to your Trust wallet and add Binance Smart Chain. But I just wanted to make that super, super clear, because it's amazing to me. We've been doing these giveaways now, Keith, for a couple months, because I started giving the tokens away even during the pre-launch stage. So everybody that's watching should have heard Binance Smart Chain 100 times by now, but I just want to make it super, super clear. The other thing is, guys, you have to be present to win. So for those of you that have stuck with us for the last hour and a half, you're the ones that are going to have an opportunity to get rewarded. On that note, when you get chosen, if you do get chosen to win, I want you to go into the chat and let us know that you're here. And then I'm going to click on your name like I am here for Titan. And you're going to see that pulls up Titan's YouTube channel here. You go to your About page and you add in. So he's got his Solana address here. I'm not sure if he won one of my giveaways and I was doing something on Solana. It's probably been a while if it was Solana. But long story short, you're going to go in here and you're going to put your Binance Smart Chain wallet address. And then I want you to put in your BYDFI user ID so that I can verify that you've got an account on BYDFI. Guys, these guys sponsored the channel. They're helping me out with the giveaway. So it's only fair. If you don't have a BYDFI account, they're an amazing exchange. And if you're in the United States, you don't have to use a VPN. You don't have to KYC. They welcome pretty much all comers. So if you win this giveaway and you don't have a BYDFI account, go to the description of this video, go create a BYDFI account. So those are the 2 things that I'm going to need here. Your BYDFI unique user ID number. I'm going to verify that you are in fact on my referral list for BYDFI. And then I need your Binance Smart Chain decentralized wallet address here. And we are going to give away 5 winners today. So this is what I'm going to do, folks. 4 people are going to win $25 worth of Agape tokens. So those 4 of you, if you want to get in on the vote in the next 21 hours, are only going to have to go buy another little over $50. And then the 5th winner, I'm going to do something a little bit special for. What I'm going to do is I'm going to take one of my wallets that I've purchased my own Agape tokens with, and I'm going to vote for the token that you want me to vote for. And we're going to see if you pick the winning token. If you pick the winning token, I'm going to give you $100 in Agape token. And as a consolation prize, if you don't pick the winning token, you're still going to get $25. So the first 4 people I draw, $25 go into your Binance Smart Chain wallet address today in Agape tokens. The 5th winner, you need to do what I just mentioned here. But the other thing that you need to do is go to the Infinite Agape IO page and look at these 7 tokens and tell me which one you want me to vote for. And I'm going to vote for you through one of the wallets that I've purchased Agape on. I'm going to vote for you. And if you pick the winning token, you get $100. So with that, let's quit screwing around and quit talking and actually go draw some winners. So this is what we're going to do here. I'm going to pull this up. We're going to go to the StreamYard giveaway tool. And to make sure that everybody is legit and that you're all really here on the channel and that you're not a bot, we are going to have you type in hashtag Agape. We're going to start collecting comments, and I'm going to do this drawing relatively quick, folks. I know that there's a handful of you that like to try to log in on 2 or 3 YouTube accounts fast and give yourself, a little bit of an edge. And although I respect it, it does frustrate me sometimes because, like, it's kind of funny, Keith. The guy that gave me the wrong address was actually, we found out that he was a scammer, that he goes by another name. And I'm literally talking to him in a different chat group. And I say something like, I'm pretty sure you have like 10 or 15 accounts that you're trying to win these giveaways with. It's like, no, that's not true. I only have 5.
Yeah.
I'm like, dude, come on, man. Like, that's one of the only frustrating things. Like, I love these giveaways, but I get frustrated by all of the people that try to game the system instead of just having fun with it and trying to win legit. With that, we're going to start drawing winners.
Make it fair, guys. Make it fair. Come on.
Paul, welcome. Hope you are still here, Paul. Go ahead and let us know in the chat that you are still here. Second winner is going to be Carlos Xavier. Congratulations. Let us know that you are here. Once again, the first 4 people are going to get $25 in Agape tokens. Now, guys, in full transparency, Eastside Crypto, in full transparency, folks, if you're just going to sell the tokens, do me a favor and just give me an address and just say USDT. So I'll be honest with you. The reason I'm giving away these Agape tokens is to help build a community. And I think it's a great start towards being at least a $77 member. But if you need the $25 real bad for life, you need to fill up your gas tank, you need some lunch money, that you're just going to sell the Infinite Agape tokens, I'm okay with that. I can understand it. I appreciate the honesty, but do me a favor. Don't hurt the charts. Like, just tell me in your YouTube bio that you would rather have USDT, and I'll send you USDT. I'm cool with that. So please, guys, let me know. If you want the Agape tokens, you're excited to be a part of the community, get in there and be able to vote, fantastic. If you're not, just let me know in the description next to your address that you would prefer USDT, and I'll shoot you some USDT. No worries. Fourth winner is Nerd Crypto, man. Congratulations. All right, well, here's the big kahuna. This gentleman here is going to get an opportunity to win $100 if they pick the winning token out of those 7 tokens. The winner will be announced here at 7:30 in the morning. Hey, God will make everything better, man. This is a guy that I know is a solid community member of the YouTube channel. Great guy. So I hope you pick the winning token, God. So go ahead and give me your wallet address and give me your user ID number for BYDFI, and then let me know what token of those 7 tokens you would like me to vote for. And if you win, you'll be getting $100 worth of Agape and 25 as a consolation prize. So we got everything there. Last but not least here, Keith, and then I'll get you out of here. Let's make sure that everybody's here. So here is Nerd Crypto. We're going to pull up his channel, make sure we've got it there. Yep, we're good. So we got Nerd. We need Paul. Paul's here. Go to your channel, Paul. And then we're going to need, what was it here? Eastside Crypto. There's Eastside Crypto. Go to your channel. Carlos Xavier. And God will make everything better is our last winner here. Here he is. Awesome. I think that takes care of everything.
Sweet.
Well, once again, Keith, it was an absolute pleasure. And I'll leave it up to you. Once again, I told you that you were invited to be here as much as you want to be. So if you'd like to come back next Tuesday, it's an open invitation. You don't have to decide now, but sometime in the near future, let me know if you'd like to come on again on Tuesday morning. And if so, we'll have you back.
Yeah, no, I was a little bit tired today. It's been a bit of a long day, but no, I'd be delighted to come back on Tuesday, and I'll see you all guys then.
Awesome, man. All right, fellas, thank you all for being here. God bless. Have a fantastic Tuesday, and we'll see you all tomorrow, hopefully on the Wednesday live stream for the Microcap Gem live stream tomorrow at 9 a.m. Pacific Standard Time. Bye-bye for now.